Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 16th, 2022, and I'm very, very excited because we are at a major support level for Bitcoin as well as the rest of the cryptocurrency market. Okay. And we've been bouncing off of that level, okay? We've been showing strength off of that level. Very, very important, okay? I know a lot of people in the mainstream technical analysis community are kind of either bearish. When I say a lot of people are bearish, I'm just looking at the figures, like, how many people are short. There's a disproportionate number of people that are short now versus long. Okay, so that's what I mean by saying a lot of people in the analysis community are short. They think we're going to go down, right? They have targets between 10 to 12K Bitcoin, some even lower. But I'm here to tell you why this is very unlikely and how it's more likely than not that we are creating a move up, okay? And thus far, it's only been a series of corrections indicating a move up. But I'm going to show you all that on the charts. We're going to look at the DXY as usual. We're going to excuse me. We're going to look at the total cryptocurrency market cap because I feel like looking at that. We haven't looked at that in a while. And we're just going to go down, our watch list as usual. So, guys, if that sounds interesting to you, then stay tuned. I hope you're having a great day. It's nice and sunny in the DC metro area. All right, let's get started with Bitcoin. Let me turn my indicator off, my momentum indicator off. Let's go on the high time frame. Start out on the weekly time frame. Okay, I'm telling you, and this is not a slight or anything like that. I really don't care. People can do what they want, but you have people very, very big names in the technical analysis community. Very big names. I mean, people that are on TV, they're on every single last show. They have a large following. They take people's money for technical analysis. They literally don't know when to turn on their log scale. They'll do this analysis like that. Okay? And they do their analysis like this. Okay? A number of people. Okay? This is very, 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 it's just not, that's not how you do it. That's not how you do it. All right? Like, very clearly, this doesn't make any sense because you don't see any data. So I don't think there's much debate as to whether you should be log on the weekly time frame, or should you be on the arithmetic scale. Clearly, you should be on the log scale. Okay? And if you're on the log scale, what you can see is that you have this very nice channel that's been respected ever since July of 2017. Okay? So this is essentially, I showed this in the thumbnail, a 2,000-day support level. Okay? So 1953. Okay? 1953. 1,953 days of support. Okay? And every single time price came down on this support level, it bounced. It bounced. It bounced. That was the COVID crash, right? And right now, this is the final time, right? It's come down on this level, at this level, okay? And this behaves very regularly like a channel, okay? Not only do you see that we bounced at the support, but we also found resistance at the top, which you should expect to find in a channel, okay? So that's the other thing. And the last thing, right, when we go over channel technical analysis, the three main points of a channel, or three important parts of a channel: the top, the bottom, and the middle. The middle serves as resistance when you're below it, support when you're above it. Support, resistance, a little bit of resistance, and here a little bit of resistance on that check back right there. Okay, so this is a legitimate channel. Multiple points of data to kind of elucidate or to demonstrate the validity, the integral validity of this channel. So it's more likely than not, based off of just this analysis, that we do get that bounce from here. Okay, and that being said, I think the next, just given this channel, the next main resistance, if you will, isn't until about 45 to 50,000, just based off of this channel. Okay, that's just what the channel shows. Okay, so I just wanted to show you guys that. I thought that was very interesting. I saw another analyst talk about that, Crypto Zombie. So I thought that was really cool. So I had a look at it myself. All right. Now let's go back to the daily time frame. Okay. And as you can see on the daily, actually let's go on the 4 hourly. Okay. On the 4 hourly time frame, as we said before, you've gotten your bounce. And how do you get your bounce? As you should expect it in a 3-wave move. Okay, those 3-wave moves targeting wave 4 of the previous trend, those are corrective bounces. Those are initial breaks of structure. Okay, and after you get that, you have to get a counter. Okay, so this is your initial break of structure. This is your counter. You get an initial break of structure, a secondary break of structure, and then you get a secondary counter. Okay, so this is how I'm reading this small sort of range of price action. 2 degrees of AB basing on a small time frame. Again, for those of you who are new to the channel, new to my work, this is pretty much something that I've been studying, something that I've been researching for quite some time. Very few people talk about this, but it's from Ralph Nelson Elliott's work, and so I'm just fleshing it out. And I found that every reversal necessitates 2 degrees of AB basing and a pivot. So that's 1 degree. That's 2 degrees. And so I wouldn't be surprised if you got a pivot before a move. Okay? So that being said, thus far, everything's looking good. Okay? Everything's looking good. We can also see this in other assets, right? You find in Polkadot, for instance, you have an impulse to the downside, followed by an initial break of structure. Okay, that impulse went down. Okay, and we've talked about the idea that some people may think, oh, Dean, if this is a 5-wave impulse, then this is obviously an intra-wave correction. This is a wave 2. It's a 3-wave move in some way, some form, and it's basically setting you up for the next move down. And if you know Elliott wave theory well, you understand that that's highly improbable. Why is it highly improbable? Simply because the time it took for you to come down, 2 days and 4 hours, is very, very, very different than the time it's taken you to correct, right? You don't take 3 times as long in a wave 2 correction. Maybe in a wave 4 correction. Wave 4, you can take sometimes 6 times as long, right? But wave 2 is typically comparable in time and in price as wave 1. Okay, that's something we know from studying Elliott wave theory carefully. So this must be something completely different, and that is a consolidation reversal channel, or the AB base, the mode that takes price action from one direction impulsively and changes it. Okay, and so that's how we are reading this, and that's why we're looking for 2 degrees of AB basing, your first A wave targeting wave 4 of the previous trend, right? And then a subsequent B wave. Let's see. Subsequent B wave, I think it's like this, right? And then another A wave, a 3-wave. That's the second degree of AB basing. Perhaps this is your second degree B wave. Perhaps it's finished. In any case, on a small time frame, wouldn't be surprised if we got a pivot before a move, okay? So that's what we're looking at. We can see it in Polkadot too. Let's just run through. Again, impulse, initial breakup structure, Cardano, wave A. This clearly wave B, okay? Another wave A, another wave B. I anticipate some sort of pivot, right? 2 degrees of AB basing and a pivot. That's what I've observed, okay? We could just go down the line, guys. Same thing. 1, 2, 3, 4, 5. Actually, let's see. No. I think this is 1, 2, 3, 4, 5. Okay, and then your wave A was here for reserve rights, like this. It was a 3-wave move here. Okay, and then this was your B wave. This is A. Maybe this is B complete as a 3-wave zigzag, and then you're gonna do a you're gonna do a pivot into the second the C wave of this A wave. Okay. Anyway, you guys can do it on your own, prove it to yourselves, see the consistent read of this being a consolidation reversal pattern. So you can see it in Dodo, you can see it in Ethereum, right? You can see your 2 degrees of AB basing. 1, 2. Okay, that's degree number 1. Degree number 2. Okay, pivot, move. Okay, that's what excites me, guys. And then let's say you don't know anything about Elliott wave theory. Okay, all you know is you made a higher high and you're consolidating. You're holding a level. You're making higher lows, right? Likely to continue to the upside. Okay, I know that is pretty simplified, and that doesn't always give you clear answers, but that's one way to look at the price action. But at the end of the day, you gotta look at price action. Why? Because if you only look at your indicators are going to be okay. Now the indicators have reset a bit, but before they were just overbought, and people were like, "Oh, it's gonna crash. It's gonna crash. It's gonna crash." Indicators don't know the future. Indicators are only measuring what's happening now using a series of other indicators. Okay, the primary indicators are volume and perhaps exponential moving averages or moving averages. Yeah, they just use a series of primary indicators like that. Zilliqa, same thing. Okay, Dogecoin, same thing. Okay, what's important is in all of this, you can count 2 degrees of AB basing, but what's important is you came down impulsively, you bounced off of that very important support that you didn't want to lose, and you bounced from there, and now you're consolidating. How you're consolidating, whether you read 2 degrees of AB basing or not, that's all you need to know. Okay, synthetics, this one's moving. This is probably going to be the first to move. Okay, as you can see on a smaller time frame, or on this time frame, you can see it making that inverse head and shoulders, and it's about to break it. Okay, actually, synthetics put in its 2 degrees of AB basing like this. This was wave A. Let's get rid of that line. This is wave A, targeting wave 4 of the previous trend. Wave B, that's counter to this wave A. Okay, a second degree A wave. Okay, and a second degree B wave. Okay, and that's the full impulse. That's starting the full impulse, and we can prove that. Look at this. Let's go on the hourly time frame and prove that this is thus far behaving like a proper impulsive wave. Let's just put the count down. This is behaving like a wave 1, wave 2, wave 3, wave 4, and then expect a wave 5, you know, probably an extended wave 5 somewhere. Okay? And how do we know that? It's that's a highly probable read. You take your Fibonacci extension from wave 1, retracement of wave 2. You see that wave 1 and wave 2, if you measure it, you'll see they take about the same amount of time to form. Okay? That's very important. Wave 1 and wave 2 take about the same amount of time to form, typically. And then wave 3 comes between the 1618 and the 2 Fibonacci extension. Wave 4 is a complex correction that respects at least the 0618 of wave 3. Typically it respects the 0382 of wave 3, but in this case it goes all the way down to the 0.5, which indicates that wave 5 is going to be extended. Okay? And if that's going to break important resistance, okay, we know that the extended wave 5 is very likely because it's going to break, right? It's going to break this inverse head and shoulders to the upside. Okay? So that's what you're looking at throughout the market. You're putting down bullish setups. Algorand, same thing. And Binance is, oh, I want to show you Binance. Let's go back to Binance. Binance is very, very, even though it's coming down a little lower, you can still make the same analysis. Guys, it's not about what it looks like, it's about the structure. Okay? Because, you know, corrective waves can take many shapes, but as long as you can read them, they'll look a number of ways, right? This one's still making a slightly higher high than the bounce, but you can see here all your A waves and B waves, right? I think, yeah, this, actually, sorry. I think the B wave stops here. Is that true? I don't know. No. I was right the first time. I'm sorry. I think it goes down here. And then this is wave A of the second degree, and then this is wave B of the second degree. Okay, and then somewhere here you're getting somewhere here at your support that you've been holding. If that's not clear support, I don't know what is, right? You just keep testing this as support every single time you're bouncing off of it. Somewhere here you're probably going to put in a second a pivot, and then you're going to shoot up. Once this happens, if this indeed is going to be our breakout or the start of our bull market, it's going to go a lot faster and a lot higher than people think. Okay? It's going to go a lot faster and a lot higher than people think. What do I mean by that? Let's go back to Bitcoin. What I say about this middle line, right? How does a channel work? Channels have 3 levels of import: the bottom, the middle, and the top. If this is indeed the beginning of the bull, then don't be surprised if we just go straight to 50K, 45 to 50K. Don't be surprised. People are talking about 19,000, 20,000, 25,000, 30,000. Don't be surprised if we go straight to 45 to 50K. Consolidate here, and then continue, right? And then obviously the next important part of the channel is the top at 100K, and then consolidate there, and then continue, right? Don't be surprised if something like that happens. It's going to be a lot bigger and a lot faster than people think, because according to our high time frame analysis, this whole bull market wraps up mid-2023, thereabouts. Okay? Let us look at now. So we did Bitcoin. We did our watch list, okay, let's have a look at the DXY. Okay, a lot of people are telling you there's contagion in the market. You know, this company is going bankrupt, that company is going bankrupt. People are very concerned with what happened with FTX, and that's all they can talk about, it seems. Okay, and it's important, don't get me wrong, but should it determine your buying and selling? I mean, not really. If you know how to read a chart, no, right? The only thing that can move a market is billions and billions and billions of dollars, okay? If it so happens that on that day or that at that time billions of dollars of Bitcoin were sold, yeah, sure, you can have something move. But unless somebody's selling billions, I mean tons, many billions of dollars, the market's not moving because of some news event. Okay? And the charts are telling you this is a huge bottom. This is a very important bottom. And the charts are also telling you that the DXY is in free fall. Okay? So we looked at this yesterday. It's very likely that we hit the bottom of wave 1 of this 5-wave impulse for DXY. Okay? And now what you did was put in an A wave again. Let's see. Let's try to read that. Yeah. I'd say an A wave, it's a 3-wave move targeting wave 4 of the previous trend. Guys, do you see how consistent this is? Okay, now this is not going to be a consolidation reversal, but it's going to be an intra-wave correction. So the second mode of Elliott wave price action. Okay, this is impulsive price action. This is corrective intra-wave correction, right? So these intra-wave corrections typically look like this. It's probably going to go up a little bit more and then come down. You know, an A wave, a B wave, then another final C wave. At the end of the day, you're looking at printing something that looks like this. Okay, a 3-wave move coming back to this region and then going up a little more. We know that the minimum retracement of wave 2 is 382, the maximum retracement is 0618. So if we were to measure that, that's something akin to what you would see. Okay, probably not going to come up as high, but you understand what I'm saying. So all of that is something you should expect on the charts. 5 waves up, 3 waves, or 5 waves down, 3 waves up, pivot, continuation. But all the while, Bitcoin is doing what it's supposed to do. The stocks are doing what they're supposed to do. A lot of people are confused. They're saying Bitcoin and stocks have decoupled. They were never coupled. But stocks are going up. The DXY is going down, stocks are going up. They get that. But why is Bitcoin going down when stocks are going up? They don't understand. They think that stocks move Bitcoin. No, the dollar moves Bitcoin. And again, just as I said in previous live streams, you don't want to look at the small time frames. The correlation between the DXY, the US dollar currency index, and Bitcoin is one that can be seen very clearly on the monthly time frame. So if you look at the monthly time frame, you can see whenever Bitcoin or whenever the DXY has gone down, Bitcoin has gone up. Whenever Bitcoin has gone up, whenever the DXY has gone up, Bitcoin has gone down on the monthly time frame. So don't go into a 4-hour, 15-minute, even daily time frame and think, well, I don't know, this correlation is broken. Not necessarily. Just let it play out. So what I'm trying to say is the fact that the DXY is going down and is in an impulsive downtrend means Bitcoin will go up. It doesn't have to go up right now just because the DXY the S&P and other stocks are going up. We all know they're going up correctively. We all know that they are in a correction. Bitcoin's not in a correction. Crypto is not in a correction. So people like laughing about crypto and saying it's shit and we're gonna have an ice age. They just don't understand, right? And there are a lot of opinions you can have, but there's no arguing with the 8-year correlation between the US dollar currency index and Bitcoin. There's no arguing with that. And it's only 8 years because that's as far back as I had data. It may go back to the beginning. It's not like I saw a part of it that it wasn't correlated, right? So, and as usual, Bitcoin dominance is frozen, but we expect for it to do more of this, right? It's in a downtrend itself. This goes down, up. This looks like it's going to continue to go down, okay? And we all know dominance going down, right? Look at the indicator. It's completely overbought. Bitcoin dominance going down means crypto bull market on. Okay. Now, let's look at the total cryptocurrency market cap. Okay. So this is not just looking at Bitcoin, but also considering everything that's in the total crypto, in the entire market. Okay, let's go on the weekly time frame. And let's see if we can't find... Well, it's this total cryptocurrency market cap. 2 observations. One, it's very similar to Bitcoin, which makes sense because that's why we use Bitcoin as a proxy for the cryptocurrency market at large. Let's see. It's very similar to Bitcoin. But it's not as clean. Do you see? So we're looking for this channel in the total crypto market cap. It's not as clean here. It's not as clean here. Basically, it's showing you that other assets didn't do what Bitcoin did. And the other thing I want to point out is this. Look at where we're at. So in Bitcoin, you have a substantially lower low. It's not like, violating this level. You still have a range here. But in the total cryptocurrency market cap, you would look at this and think nothing of it, right? Basically, in total cryptocurrency market cap, if you go on the daily time frame, I think you could see this more clearly. It looks like your run-of-the-mill consolidation reversal pattern that did not, I repeat, did not make a substantially lower low. On the total cryptocurrency market cap, you got your A wave targeting wave 4 of the previous trend once again, right? You got your 1, 2, 3, your B wave, okay? You've got your secondary A wave, and then your secondary B wave. Like, the total cryptocurrency market cap looks like the easiest read ever, right? What did I say in the beginning of the video? 2 degrees of AB basing and a pivot is what you need based off of my research, looking at charts every day for I don't know how many years. 2 degrees of AB basing plus a pivot, and you can change your direction. That's your reversal. That's your consolidation reversal pattern. Guys, this is it's not simple in the sense that you know exactly what's coming, but once it's printed, it's readable. 1 degree of AB basing. So big A, big B. Second degree of AB basing. Small a, small b. In both cases, the B wave retraces between the 786 and the 1618 of the A wave. Okay? And here, you have your pivot. What is a pivot? It's another AB base. Okay? It's another AB base on a smaller time frame. Also, on the daily time frame, your indicators printing a move up. Okay? It's completely oversold. So on the total cryptocurrency market cap, I mean, it's very clear what the market is doing. Very clear. It's unambiguous. And here, you go on the 4-hourly time frame, Basically, this was the last impulse of that B wave, that second degree B wave, okay? And again, you can see, you'll just put in a pivot, an A wave, a B wave. Let's go on a smaller time frame so I can actually mark this up. Guys, if you're getting value, please like, share, and subscribe. I don't know that you can get this anywhere else on the internet. I wish other people were talking about this, but then again, who cares? Eventually, people will talk about it because somebody will see this and be like, oh shit, he was right. And then they'll be like, okay. And then they'll run with it, and then more people will run with it, and then it'll be a thing. But it's fine. I don't really care. I'm not doing this for popularity or anything like that. I just need to, win my trades, and that's it. That's all I'm here for. Winning my trades, and then sharing. Yeah, that's it. I feel good sharing. I don't need anybody to recognize it. If one person gets value from this, it's great. This is your second degree A wave. This is clearly a flat correction B wave. Okay, and then again, smaller time frame. Maybe this is already, maybe that pivot is finished. Maybe the pivot is finished right there, right? Or maybe this is the start of the impulse. Okay, so you're looking good. You're looking really good. But a lot of people are not going to be able to read this, obviously, because, not many people pay attention to this level of detail. And then the last thing I'll say is, we know that a lot of people are actually thinking it's going to continue to the downside. If you go into your Bitcoin shorts, you see that on, let's go on the daily time frame. So you see how high shorts are, right? Let's even go on the weekly time frame. Let's get rid of the momentum indicator. Shorts are almost at a historic high, okay? Since 2018, right? This shows the amount of shorts on exchange, on Bitfinex, okay? Not necessarily, all the exchanges, but Bitfinex in particular, which is a whale exchange. It's an exchange for big players, okay? This shows the level of shorts, okay? In 2018, you had a record high number of shorts, okay? It went down, and then it went back up in 2021, okay? May of 2021, which was the top of the market, okay? You had a record number of shorts, then it went back down, okay? Now it goes back up. It went back up here, and it came back up over here. This is the highest it's been since June 2021. Highest number of shorts on Bitfinex exchange since June 2021. Okay? So what I want to do actually is, I'd be interested, because, we should be able to read everything as price action. In this, I'm reading a 3-wave move, okay? That's a corrective move. And in this, I'm reading a B wave, right? Some complex B wave, right? Maybe it's a 333 or something like that. But what I want to do is I'm going to take the top of this, the bottom of that. You're basically hitting, you just passed the 0618, and you're probably targeting the 786 thereabouts, because I see this as some sort of flat correction. 3 waves up, or sorry, 3 waves down, some version of 3 waves up, and then boom. That's what I see. So basically, shorts are going to come down, and it's not because people are going to be persuaded to flip short. They're going to be forced to flip short, okay? And let's look at that now. Why are shorts going to be forced to flip short? Now, looking at Bitcoin, let's go on the hourly time frame. A lot of people are going to go short, or have already gone short rather, okay, once this happened right here, and they thought this was it, okay, they went short here maybe, and then they went short here, other people went short here, okay, and what's going to happen is those shorts are going to be trapped as soon as this runs up, okay. And again, what you can see very clearly is a three-wave move and a three-wave move. What comes next? Everything happens in threes. 3 waves up, 3 waves down, 5 waves up. Okay? So that's what we're expecting. When that starts going, it traps all the shorts. They're forced to go long. That's called a short squeeze. So, yeah. That's what I'm seeing in the markets. That's pretty much it. Again, in our watch list, it looks like synthetics is the first to go, and it's right on the cusp of doing that. Let's go on the really short time frames. Let's see. Yeah, it looks like synthetics is the first one to go. You know, these other assets will follow suit. We'll see if in the general watch list, if anything else has gone ahead. Okay. So let's see. Nothing yet here. Synthetics we saw. No Ben, no Ales. Waves. Yeah, it looks like synthetics is leading the market as far as I can tell. As far as our watch list goes and our general watch list. I'll just keep an eye on it. Okay, and then let's look at crypto bubbles. Okay, and let's start off with top 100. Apparently something called TWT and APT, Aptos, I think, are starting to move. TON as well. Okay, SCRT and Wi-Fi. So I think Secret, we'll check that out. SCRT, whatever that is. Okay. Okay. So yeah, that's we'll just check out SCRT. Okay. So it looks like it moved yesterday. And then it put in this 3-wave move, right? A, B, C. And now it's doing some A-B basing. Okay, cool. Alright, so guys, that's pretty much it for me. Hope this was helpful. Hope this was useful. Don't forget to like, share, and subscribe. And I will see you tomorrow for tomorrow's live stream. Take care. Bye.